allow me to welcome back to Capitol Record a very special guest, the very first guest we have had of the 2025 calendar year. Lacy, welcome back to Capitol Record.
My pleasure.
Well, our topic today is to spend a little time thinking about the state of the economy, something that you have written about recently at great depth and with a particular focus on what we believe the impact of tariffs and trade policy has been thus far, we expect to be going forward. And we're going to bring this to a place where we talk about the really important things, the things we want to look to into the future to evaluate trade policy impact on economic growth. But to do that, we have to sort of start with a baseline as to where we understand the economy to be now. And it's something that I think you have a lot of thoughts on as we try to get a more sober assessment as to where we stand. Maybe start off by commenting on what you think we now know about the state of the U.S. economy.
Well, it's in a far more fragile state than I think is generally recognized. One of the things that we know about the U.S. economy is that the service sector, which is our biggest share, is generally rock solid. It's hardly ever affected by what goes on in the cyclical side. Recessions occur in cyclical. The service sector is steady as she goes. And one of the telltale signs that we're on the precipice of something more serious is that the service sector has flatlined in the last 3 months. That just doesn't happen by accident. And the July numbers were out today and confirming that. The other problem is that the economy, as was portrayed by the critical statistics in 2024, appear to have been very overstated. And not just for the employment, which are probably the most critical of all, but in turn for a whole host of other economic measures. But the economy primarily keys off of the monthly employment report, the payroll jobs. But the payroll jobs is a very limited survey, just 360,000 firms. Admittedly, they're large firms, but we have 12 million firms in total. And so the BLS has to go from this small sample to the full sample. And moreover, the BLS has no current information on what's happening to small firms that are being created and are dying. And the BLS has overshot now, or the payroll jobs have overshot the broader full labor market, something called the quarterly census of employee and wages. Its companion, the business employment dynamics, for 5 of the last 6 quarters, and every single quarter in 2024. It looks like that the overcount in private sector alone was just under 1 million. Huge miss. Now, they've had misses in the past. In fact, they had a miss that may have been this equivalent, whether it's the same or a little higher or lower, we don't know, but in 2008 and 2007. And the BLS got a lot of criticism for that. And they reworked this formulation of going from the small to the large full sample. And they said they'd fixed the problem. But as the data is now coming in, it appears that we had a 5 to 7 sigma error, which is very similar to what occurred during the great financial crisis.
Is there a thought that this revision that has just sort of hit the wires last week and obviously evoked quite a response from the president, that it is subject itself to being revised? Will the revision be revised in the other direction, or do you expect that we're now getting a validation of the truth on the ground?
Those counts are hardly ever revised. the BLS may change the seasonal adjustment over the course of time, but the count is the count.
Yeah.
And the numbers are hardly different. It's the payroll where the revisions are great. And so now the revised picture indicate that the labor market was struggling, was moving ahead, but hesitantly. And it's quite possible that in two of the quarters last year, we actually had sequential declines in employment. Totally different picture. And the household survey didn't show this, the strength in the payroll. Um, the National Federation of Independent Business Data surveys from the Conference Board, Michigan, showed a different pattern. And perhaps, not perhaps, but very likely, the best poll of all showed that the payroll data, and what I'm referring to is the exit polls that were taken on election day. Because people coming out of the polls were given 5 choices about the economy, from very bad to very good. And 70% said that conditions were either bad or very bad. In other words, people were very concerned about the economic circumstances, in spite of the fact that the government was telling us the labor markets were resilient. The typical voter didn't believe that. And so I think that as a result, because payroll then is supporting this inverted pyramid. And so if you take the payroll numbers down, then wage and salary income has to be changed, and personal income and gross domestic income, personal saving and national saving. And is it conceivable, if they had a major miss in income, are the income numbers also understated? So we don't know where the productivity figures are. We also don't know where industrial production is. And so when you have a major failure to capture the labor markets, it tentacles move through all kinds of other economic indicators. And so in the frankest terms, we don't know where we are, but I know this: we're struggling even before this year started.